We've got earnings, and we've got some good ones. We've got Expedia, Pinterest, Take-Two, and then George Tillis will be hitting Cloudflare and Affirm with us as well. Nicole Petalides, Kevin Green joining me this afternoon. Nicole's a host of the Watch List, Trading 360. Kevin's our senior markets correspondent. And Expedia is going to get slammed. All right, not off to a pretty start here. Brutal trade. Shares rallied $5 during the day and just dropped 18 in the aftermarket. Bottom line earnings look like they came ahead of the expectation. $1.72 versus $1.68. And the EPS at $2.89 is roughly in line, maybe a small beat of the estimate. They have also outlined a transition plan for the CEO, and that's going to include the appointment of Ariane Gorin as Expedia Group's CEO. That's effective in May. So a little bit of CEO change up, gross bookings up 6%, trailing numbers not bad, Nicole. I think the bar's pretty high. Shares up 30% in the last 52 weeks.
I'm going to say here, I just want to see how much the move is. Okay, so right now it's down 6.9% on this news. So what is the reason for the hindrance? Is it the apprehension on the CEO change? You have, were we expecting this CEO transition plan? A double beat doesn't mean you go down 7%, right? So where is this? Gross bookings were up 6% year over year, and the stock was sitting around highs of $160, 52-week highs. So you do have a change in the CEO suite, and I'd like to know what the transition plan will entail. It looks like that this was something they'd been planning on, somewhat of a succession plan, but still sometimes it brings some
the announcement of is new,
but it's down 7.5.
No, that's pretty fresh. He's been there since 2020. Peter Kern. As far as I know, this is the first time that I've heard about this, but I haven't really been watching. I'm not the Expedia analyst.
Beat.
Yeah.
The outlook beat, right?
Solid.
So what's doing here?
Yeah. What do you think, KG?
Yeah, I could say the gross bookings did come up a little bit light compared to the street's expectations. That might be another reason why we're seeing a move to the downside here. I'm not looking at the margins yet, but I would suspect that they probably saw a little bit of pressure within the quarter. And then, you have that move when it comes to the CEO, and sometimes the market really does not like to see that. So that could also put some downside pressure here on the stock. But once again, I think the gross booking number, I think, is going to be the key area that they're going to have to talk about during the call. Is that just a blip on the radar because of certain weather events, things of that nature, or is that something that is beginning to become a trend here moving forward? And is that going to be something that's going to be offset by maybe rising prices in order to try to pad the revenue estimate moving forward?
Okay. The CEO does talk about how their constraints of the past few years, obviously a reference to COVID and travel and all that stuff, now behind them, an exciting place to go back on offense and lead the industry. So I guess it seems like he feels his job is done from this period, and maybe it should be smoother sailing going forward, which makes sense. I think what we all see around us. So maybe when it comes to just the overall kind of bookings growth here, the market's being a little bit tough on them, Nicole. Revenues 10% are okay. Operating income, though, did decline from a year ago. It's not a perfect report.
It's not. And my question is, why do the analysts so often turn to Booking.com over Expedia.com? If you look through just this month of February, you have a slew of price target raises and buy ratings on Booking.com, which is sitting at $3,800. And Expedia has VRBO, Hotels.com, One Key, just to name a few, Expedia.com, its own namesake. But what are we missing? And people have been spending. Visa and MasterCard noted we have a stronger U.S. dollar. Are we going to start worrying about foreign exchange rates? But the big picture just continues to fall. It's down about 9% now for Expedia.
My 2 cents would be I've kind of thought this industry for a while now has become a bit outdated. Don't use as many of the booking sites anymore. There's very little, if any, financial advantage. They're usually all offering the same thing. You can go through all the different clicks and pop-ups to get into the most bizarre travel sites. You're getting the same price everywhere. Only place I know of to get discounts is Hotel Tonight, which is, I think, stolen a little bit of some of their booking thunder for Hotels.com. And then I think a lot of this could get AI'd away, which, I don't know, it might be good for their margins or whatever, but right now I can do a lot of trip planning and schedule planning by plugging it into ChatGPT. Let's talk Take-Two real quick. I don't know, do you think I'm being too ominous on that, KG? I'll give you last thought on the booking stuff.
No, I think you are right, and I never even heard of that site that you're using, so I
Hotels
think
Tonight,
you are right
baby.
there. So there's a lot of options out there, and then you also have the Airbnb aspect too that could be taking some market share.
Oh, you got Costco Travel too, for the pops in the room. Okay, that's kudos from, well, I guess KG too, coming from our producer. All right, Take-Two. Let's talk some games. Up a couple percent here in the aftermarket. Take-Two bookings up 1.34 billion, down 3% from a year ago. Revenues down 3% from a year ago. A GAAP EPS negative on the bottom line. I don't think the market cares about any of that because, as we talked about with our guests this afternoon, it's all about the next Grand Theft Auto, Nicole.
Yeah, I mean, this is what they have. They have 2K, they have Rockstar. We think about GTA. This also comes, this is more of a pure play. You already had Activision going into Microsoft. So here, we want to see what they're going to say about the future here. But for right now, I'm seeing the net bookings forecast 5.25 billion to 5.3 billion. It has been certainly doing great. For 1 year, it's up almost 50% and sitting at 52-week highs. The stock is jumping on this earnings report, so they do like what they're seeing here overall.
Okay. Take-Two, just kind of hard to really give it too much time when so much of this is about the look forward. I get Nicole's point that, this is still a kind of stable of games that folks are playing, and they've got some pretty steady bookings from that, but I mean, this is going to be a story of epic proportions in less than a year from now, Kevin. So what is there to say about Take-Two until that next iteration comes out?
I'm right there with you. It's just a wait and see story, and we continue to see analysts actually boosting their expectations when it comes to GTA. And we haven't seen a new GTA in what, 8 years, 9 years?
Yeah,
it's like
maybe
even more than that at this point.
Yeah.
So I mean, the dynamics when it comes to in-game purchases have just completely shifted since the last iteration here. So I think a lot of the models are really kind of basing it on what they've done in the past.
That's a good point.
But the opportunities for the growth of this name could be substantial, to say the least. I mean, we have whole ecosystems right now that are trading as a stock, like Roblox. You even have Fortnite that has a significant amount of in-store sales. So I think GTA is definitely going to probably bring the heat here, and I think the market's just patiently waiting for that. And that guidance moving up too may also put a little bit of speculation that maybe this game's going to get closer and closer than what they maybe have originally expected.
Yeah, all right, good point. I wonder if maybe they'll ever just spin it off into its own entity like Roblox, but I doubt it. Their pride and jewel, their crown. But you never know. Stranger things have happened. All right, let's talk Pinterest. Bloody report here, Nicole. What's up? It's down 22%.
Oh my goodness. All right, so bringing up pins here, taking a look to see these numbers. So that is a big drop. Let's see, the adjust comes in 53 cents. That beats the estimate. That's good news right there. At least we got one of the two. Let's see the next one here. I see the revenue 690 to 705. Oh, this is the outlook.
Yeah.
Okay, that's in the range, and so that is good for the estimates for going forward. The guidance seems okay, at least for that. Monthly active users increased 11% year over year to 498 million. You have a miss on the earnings, right, on the sales. I'm sorry. A miss on sales revenue, right? Earnings beat by 2 cents.
Yep.
Miss
I see that.
981 versus 989 million. So there's part of the problem and part of the reason why we're seeing this big sell-off, though.
Yeah, they missed it by $8 million. Not insignificant, on 900 million or almost $1 billion, but not huge.
Yeah.
But it's a miss. It's a miss. Bottom line, the outlook too seems like it's a little bit light, the 690 to 705 million for the first quarter. Street was looking for 702. So they're saying they could hit it, but they probably won't, with the midpoint being below that. I think also there was a lot of hope that this was going to be a big breakout quarter. Think about all the companies right now that have had breakout quarters, and the ones that have not delivered, I'm thinking like Snapchat and Pinterest now, they're just going to get left behind, Kevin, because they were supposed to be making all these ads pay off and stuff finally. So a kind of lukewarm outlook that's not going to work.
Yeah, definitely. And I think that's actually being sourced by the US and Canada when it comes to their monthly active users. The growth rate is just not what you have expected. They only grew about 2% on a quarter-over-quarter basis. I mean, that's not something that you want to be able to see. And we know that the average revenue per user when it comes to the US and Canada are fairly high compared to, let's say, the Asia Pacific markets. So I think that's also a reason why we saw that guide down when it comes to revenue. That also could foretell maybe a squeeze when it comes to margins. And I think that's what the market's really probably trying to figure out, because this was supposed to be a margin expansion story for this particular quarter that was going to actually carry over for their forecast moving forward. And just looking at the demographic shift, when you're looking at the geographic regions, it seems like that might not be the case. And they're going to have to talk about that on the call. And hopefully they do have a reason for that. But if they don't, I think that could be the results of the stock, remaining at these levels for right now.
All right. Okay. Nicole.
What's Meta doing right? What's Meta doing so right that Snap and Pinterest can't do?
Right, yeah.
Right?
Yeah, no, Meta's in a world of its own at this point. Well, billions of users helps.
Ali, it was about the pins, right? You were talking about the app situation earlier. So maybe you can call them up, let them know, and turn the stock around.
No, I'm serious. Every time I try and go on there, I stumble on there, I'm shopping for a couch or a rug or something. I'm pressing, I'm pinning, I can't figure out where to buy it. I went on it today to look at it. It looks like they've made it a little bit easier, but I think it took them too long, Nicole, and now they're behind because, to your point, everybody else has figured out how to make money off whatever their app is at this juncture. It's like, it's 2024.
Yeah, I know a lot of people who loved it. A lot of people were pinning and sending me these things, but that was like maybe 2 years ago. Nobody has sent me anything on Pinterest or shown any interest in Pinterest at all. That I know. That means nothing, but I will tell you that.
More like pin, not interest. Okay. Thanks, guys. We got to jump. We got some more earnings coming up.